to ponder over another issue that's on the table. One of India's most profitable supermarket chains is about to hit Dalal Street with an IPO. Avenue Supermarts, which owns and operates D-Mart stores, is all set to raise 1,800 crore rupees through an initial public offering. Amnish Aggarwal, the Senior Vice President of Research at Prabhudas Lilladher, has joined in, and so has Mr. S.P. Tulsian, to tell us whether this is a subscribe or no. Gentlemen, good morning and thank you very much for joining us. Mr. Tulsian, you go first. What have you made of the valuation, sir, at 1,800, at the price at which it's coming? 295 to 299 is the price range. Buy?
See, Lata, first, if I first take up your question of the price band, I think it is looking quite attractive. And in fact, after going through the IPO, the whole RHP, what I have in fact found that this is a classic case of case study by the management colleges and all that. Because if you see, the retail has been at a nascent stage in India, and there are no comparative play available. Maybe I have compared the issue with the D-Mart with Future Retail. Future Group has seen lot of restructuring and the rearrangements having happened in the group. And third is the Reliance Retail. And since we don't have the Reliance Retail standalone numbers available with us, or maybe even if I compare them, I think the D-Mart or the Avenue Supermart just stands on above all these three companies, because I have taken the sizable or the significant one. Now, if I just quickly go through, just take the situation of the inventory days, the company is holding is 26 days against 104 days of Future Retail. As I said, that Reliance Retail I have not included. Again, the biggest advantage with the company is that 90% of its retail premises of about 36 lakh square feet is owned by the company. This is the gathered information. It could be 80%, it could be 75%. So obviously, because they save the rental of about 7 to 8% on the of the top line, and because of that, their EBITDA margin is at 9.2% against 3.7% of Future Retail. And come on the PAT margin is at 4.6% against 2.3%. See the CAGR having posted by the company on top line and bottom line both. And what I liked about the company is that presently 118 stores is majorly concentrated in Maharashtra and Gujarat. And if you see, 80% of this the top line comes from the FMCG and grocery. They are not into all kind of retail product segments. They only focus on FMCG, grocery, in spite of knowing fully well that there is very wafer thin margins in this. But they believe in the inventory turnover ratio, because they rotate the turnover. As I said, inventories of just 26 days. So taking all this into account, then if I say that maybe 10% dilution is now happening, because 90% will be the public float, 82% will remain with the promoter post. So that will also be the low float, will also be seen as a quite positive. But purely going by the financials, that's why I've used that word, that this is a classic case of study by the management colleges and all that how the retail is really, taking shape in India if it is properly handled. So I'm quite positive, very bullish on the issue, taking the price band into consideration and more especially the financial performance.
Okay, that point is taken. So that's subscribe clearly from Tulsian. Amnish, good morning. Looking at the numbers, revenue CAGR of 40%, EBITDA 47%, profit 52%. Of course, now the base will go up. Do you think the risk reward is attractive here? And what's your recommendation?
You see, if you look globally, the most successful retail company has been Walmart. And D-Mart has been trying to do in India, if you read about Walmart, what Walmart did in USA. The most positive thing about this company is that they enter a state or a territory saturated. For example, in Maharashtra, they are 59 stores. And it is more than 60% of sales. So that gives them handful of profitability. And overall, your inventory turns are more than 14, much higher than any other retailer in India. So I think overall, you can say the dynamics on which the entire business model is built seems to be very positive. The sales mix is improving, the financials are good, and I think over a period of time it should do well.
Okay, I think that's the shortest discussion. If both of you recommend such a strong buy, and Mr. Tulsian has already buttressed it with some very strong reasons, we'll wrap up the conversation here. Thank you very much, Mr. Tulsian and Amnish. That's a strong buy recommendation coming from two experts on this IPO that opens next week. We wrap up Bazaar on that note. Lots of trading ideas.